endless reasons for optimism if, in fact, productivity growth is accelerating.
The powerful growth will continue into next year, and it is still too early to get positioned bearish on the market.
Right now, we're well past the crisis, and the recovery is underway.
This growth could be extended as we continue to deal with the push-pull of COVID.
The big problem, if we don't start tapering, is the pressure of inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. It's a jobless claims day. We'll look at that at 8:30, but I'll tell you something different this morning. Lisa Abramowicz and Tom Keene. And joining us from London, I get emotional, Lisa. Francine Lacqua joining the fold this morning here in the American early morning. Francine, thrilled to have you participate in an eventful week. Francine, let me go to you first here on what a different response to all going on in Kabul in the United Kingdom. I mean, just reading the news flow overnight, the worry about ISIS attacks potentially at the airport. The British take a different approach.
Yeah, I mean, the British, look, the foreign minister has come under so much pressure, Tom, just because he was on holiday when the Taliban took Kabul. And a lot of the conversation here is actually, where was he? What will the UK do? Can they have enough support from allies to take over this political vacuum that the US left? And I have to say, those are answers, many answers, but very, very few, many questions, very few answers.
We've all got our political baggage of the great game back to the 19th century, different than in America. Lisa, the great game here is anticipation for the chairman's speech tomorrow.
Anticipation at a time when equity markets keep grinding higher. Yesterday was the 51st record high of 2021.
I did not know that.
51 record highs. Today we are a little bit lower, but just to give you a sense of the momentum, it's people cannot get bullish enough. And my issue is, what could the Fed chair say to really dampen that at a time when the Delta variant is widely expected to really crimp any kind of guidance as to when they'll start tapering, at least right now?
It seems very fluid this morning, Lisa. We've got the claims data here that'll give us a jobless trend. I don't think that's going to upset the cart as well. The market's got that August feel to it, a little bit of churning going on, to say the least. But Lisa, what is your observation linking all this together into what we will hear from Powell tomorrow?
I think it's fascinating that right before his speech, the Bank of Korea became the first major Asian bank to raise rates. They raised them from 0.5 to 0.75% yesterday, overnight. Here's the reason why this is interesting. They are seeing inflation. It is real. They are seeing debt build up. And the financial instabilities that could ensue is concerning enough for them to make a move. I am curious to hear from Fed officials, perhaps not Fed Chair Jay Powell, what their take is on the market response and on how they really see some pressure from overseas central banks.
Francine, I asked Farrell about this, but he's on a 3-island tour with Gilligan's Island, something like that. It's a package deal out of Miami. And, Francine, I look at the United Kingdom. Do you have the same inflation over there and the same supply constraints we have? I mean, is Harrods out of Manolo Blahnik?
I mean, Harrods still has the Manolo Blahniks, but there's a chicken shortage. There's, for example, milkshake shortage for McDonald's, and I know that's had really a lot of UK people up in arms. Tom, I have to say, so it's the same supply constraints that you have in the US and elsewhere, coupled with actually a labor shortage that was because of Brexit. So I think there's 12,000 fruit pickers that are not here in the country because of Brexit. 14,000 truck drivers are no longer here because they went back to the EU. And so the dynamic actually here in the UK is even trickier than in other parts of the world.
And Lisa, I note here that the McDonald's at Liverpool Station, Lord Street in London, it's a place I frequent often when I travel to London, does have a milkshake shortage. Let's get a shortage and go along the data check. Lisa, help me here. -4, red and green on the screen, -4 on SPX. The VIX has done nothing since time began, 1739. Well, let me continue here, Lisa, with a yield 135 is really the headline here. We do have higher yields over the last 3 days in the 30-year bond getting out to the 2% level, 1.96%. Yes, there is curve steepening of a modest level. The real yield does nothing. Lisa, at the wall, and it's not the wall in London. Lisa, what do you have?
And by the way, just to follow up on the 10-year yield creeping a little bit higher, Tom, I'm going to do this for you. I wasn't going to do it, but 1 p.m. we're going to get that 7-year note auction.
Oh, thank you. I'll stay around.
Oh, yeah, absolutely. Definitely stay up from your surveillance snap to find out whether this is going to be the key auction that experiences some volatility. All right, today we're going to get a curtain raiser on the Jackson Hole Symposium. It was supposed to start today. It's not really, because everybody's virtual and it was just going to be a dinner and people getting together and looking at the Grand Tetons and marveling at the beauty. But today, of course, everyone's just going to be staring at their Zoom screens and trying to prepare for what the potential reaction is. Not our own Michael McKee, because he is busy and he'll be interviewing Esther George, who is the Kansas City Fed president, which of course the Kansas City Fed is the one that's hosting the event. Key question for her is, how much is the Delta variant weighing on a conference that went virtual just on August 20th? I mean, honestly, that sea change, how does that affect and color the entire nature of this conference? Then 8:30 a.m., you've been talking about it, and rightly so, we get jobless claims. The expectation is for an ongoing decline. Eliza Winger over at Bloomberg Intelligence pointing out the fact that we continue to see a downtrend in this, what Tom would describe as completely elegant chart, highlights how the main problem is just finding the workers. Will they come? And yet again throws the emphasis on next Friday and the labor market report that we get then. And then at 12 p.m., we've got General Motors CEO Mary Barra joining our own David Weston in a conversation on Bloomberg Television. I'm interested in this conversation for a couple reasons. First of all, the supply chain disruptions that we see that continue to affect automakers. Also, you see auto companies increasingly acting like tech companies. We saw Ford actually delaying some of their plans to work from the office, say you could stay home for longer. They are competing with big tech for employment, for some of the workers who can actually program their cars. Are car companies going to try to transform themselves into new tech companies? And if so, what will be the signals as to how to shore up supply chains and what they see for the future, Tom?
Lisa, thanks so much. We start strong at this hour of surveillance with Russ Kosterich with BlackRock Global Allocation Fund Portfolio Manager, someone who really can synthesize the moment. Russ, why do I want to own bonds? I just don't get it. When I see where yields are, you're short duration, I get that. But what is the weighting of bonds right now, or do you just run to dividend growth?
You know, if you're talking about traditional treasury bonds, there are not a lot of reasons. Obviously the income is not there, and while we think yields are going to back up a little bit by year end, you're still getting a very paltry yield. The reason you held them for much of the last 10, 20 years was they act as a risk mitigant. They had a reliably negative correlation with stocks. They provided some downside protection in the portfolio. Tom, as you know, they're not doing that right now. We've seen that the correlation has been somewhere between positive and zero for much of the last 6 to 9 months. And honestly, there are other ways to think about risk mitigation, whether it's being long the dollar, whether it's using volatility as an asset class. So the short answer to your question is, I think today, other than parts of the bond market, whether we're talking about EM debt or securitized that offer some yield, you own a lot less bonds than you used to.
Russ, can equity markets continue to rally if Treasury yields, 10-year Treasury yields go up to 1.5%, 1.75% in short order?
Absolutely. I mean, I think, this is the big question, but if you go back and you look at history, you've actually seen, contrary to what a textbook would tell you, that multiples in real rates in the U.S. have tended to co-move together. And there's a simple reason for that. It's because when you see that modest rise in real yields, particularly from these absurdly low levels, it's coming in the context of a better economy, better earnings growth, and that's an environment where both equities and multiples tend to be solid. So I don't think the 10-year at 1.5, 1.6, 1.7 is a big threat to the equity rally. If anything, I think the 10-year at 1.5, 1.6, 1.7 tells you monetary policy is getting a bit more rational, and the economy is solid, and earnings growth is likely to remain strong.
Russ, what does a policy mistake look like right now from the Fed? So there was an interesting HSBC note saying actually inflation is transitory, but it's the biggest danger that at any point since central banks became independent in the 1990s.
I think there is this question about, inflation, I believe, is transitory, but as we've spoken about in the past, transitory can be a long time. Transitory can last 6, 9, 12 months, given the inflationary pressures you have. So getting some clarity about tapering, getting some clarity about how long that's going to last, I think the Fed would do well to start soon, give themselves the optionality to be able to raise rates in late 2022 if inflation remains more persistent than they think. that would be healthy at this point in the cycle.
Russ, very quickly here, I've lost track, and I'm fascinated with what you think. What's the bet of the street right now? Are we way overweighted in equities? Are hedge funds loading the boat on equities? What's that tone in the malaise of August?
Tom, it's really interesting. We spent a lot of time on this, and you come to different conclusions. Clearly, people have been buying stocks. The flows have been very strong, but there was a very long period, as we know, when flows were persistently negative in stocks and people were buying bonds. We look at other measures. We look at some of the surveys, some of the retail surveys. They're not that bullish. So, look, I think people are long equities. It's not obvious that you have the extreme crowding that you had earlier in the year. And the reason for that is we've seen these violent rotations. You know, in most of 2020, when stocks rebounded, it was all about secular growth. Then it moved to cyclicals. Yeah. Now it's tilted a little bit back towards growth. So while the markets continue to grind higher in this very steady fashion, you know, as you well know, under the surface, you've had some very violent rotations, which in my opinion have kept parts of the market from getting as crowded as they might be.
Russ, how concerned are you that we saw the first decline in leverage, in borrowed money to buy stocks going back to the beginning of the pandemic? That idea that suddenly people are reducing their riskiness, or at least how leveraged their speculative positions are?
Honestly, I think it's healthy. I was probably a bit more concerned early in the year when leverage levels were extremely high. When you had, you know, these enormous surges in volume for small and mid-cap names that were trading not on fundamentals but purely on momentum, when you saw all of the meme stocks just erupting higher without any good reason, if anything, the market has actually calmed down a bit. And one of the really interesting things is if you look at, again, what's been working since February, since March, since yields peaked, you moved away from some of the more speculative parts of the market, and you've actually moved towards quality. You know, what's worked in the last 6 months has been companies that are profitable, that have consistent earnings with modest leverage. To me, that's a healthy sign that fundamentals are reasserting themselves.
Russ, thank you so much. Russ Kostrich with us with BlackRock on a global allocation fund portfolio manager. And Lisa, this really goes to the heart of the matter. We got a lot of heat the other day for so many people bullish participating in the markets. The bears have a certain level of frightenedness, if that's a word. Francine's on. I'm trying to expand my vocabulary with Francine on here.
So French.
But, you know, I mean, the bears are scared stiff, Lisa. That's what I'm trying to say.
Scared or just losing money? I mean, that's, I think, the issue.
That well said.
Point,
Yeah.
But in fairness, and I think what Russ Kostrich was saying is that the rotation has enabled some people to do well by going into certain sectors, and other sectors have underperformed. You have seen declines. So it's a nuanced market. The issue to me is you see the bears kind of expressing themselves in the stock market. Where are they in the bond market right now?
The bear that's expressing himself is lonely at the Jackson Hole Lodge. Francine, I'll tell you, this is really important. Lisa and I, we're on medication. We're not there because I'm missing the acclaimed Snake River Lager Swiss Burger at the Pioneer Grill. Lager cheese, you know.
I will send one over. You know, also who's lonely, I was looking at this story, which actually blew my mind. I mean, muni trading hasn't been this low since the start of the century. Just think about that. It's like down 34%.
Which century? If you're a fossil, Francine, there's like thank you. There's a different century as well. As Desai would say, it's a long century.
Yeah.
Yes, folks, Lisa has the Kim Chai Burger. This is Bloomberg. Good morning.
From this list of approximately 1,000, we believe the number of Americans actively seeking assistance to leave Afghanistan is lower, likely significantly lower. It's hard to overstate the complexity and the danger of this effort. We're operating in a hostile environment in a city and country now controlled by the Taliban with the very real possibility of an ISIS-K attack.
The Secretary of State working overtime for his president, of course, a changeable story in Kabul. You wake up every morning and look at the breaking headlines. We do the same thing. We thank our team in Europe and the greater Middle East for their reporting this morning. Francine Lacqua, and for John Farrell, she is in London. Lisa Abramowicz with me in New York, and now joining from Washington, Emily Wilkins with Bloomberg Government. Emily, we don't need a clinic on ISIS, but we all sort of look at what in Kabul is the early afternoon and today high threat. And the high threat is ISIS, but it's not the ISIS we know from the Levant, is it?
No, I mean, what we're seeing right now in Afghanistan, I mean, look, there's still, here in D.C., there's still the primary focus right now is on getting American citizens and Afghanistan allies out of the country. And you heard yesterday from Secretary of State Anthony Blinken saying that there are about 1,500 Americans left. They are in contact with about 500 of them. He did point out that there seem to be some Americans who do not wish to leave Afghanistan at this time, that they want to stay. And he said that they'll continue to sort of offer the option to them to leave if they want. Although, of course, it's unclear how that's going to happen, given that the U.S. isn't going to be having a functional embassy or any sort of armed services currently after August 31st.
Is there any discussion in your world of a two-front Afghanistan of the Taliban, what to do with the Taliban, but also with the so-called ISIS-K or ISIS-Khorasan? Is that even under discussion, or does that await a few days?
I definitely think that this is something that some people in D.C. are beginning to talk about, how to work with this new government, if to work with this new government. What are the threats that the U.S. now needs to be aware of, and how does our outlook need to change in response to that? But I will say, when you talk to lawmakers on Capitol Hill, when you listen to what the president and his cabinet members are saying, it really is focused at this point on the withdrawal, because at this point we're still in the middle of this, and there is such a potential at this point for something to go wrong, for an American citizen to die, for American citizens to be left behind. I mean, we are talking about that August 31st deadline, but it's good to keep in mind that for the citizens, they really only have a couple days, because the last few days, or that last 72 hours before the end of the month, that's going to have to be spent getting troops out of Afghanistan, U.S. troops and U.S. military equipment.
Emily, when this first happened and the U.S. started to withdraw, it was interesting and notable that Russia continued to maintain an embassy in Afghanistan. There was questions about the intervention from Russia, from China. What's the latest on that?
So at this point, I think that's just another facet of this, that the U.S. is having to keep a close eye on what is sort of the relationship here between Russia and China, as well as Afghanistan. I think this is something that as Congress continues to investigate, as lawmakers continue to look into things, they're going to try to be getting some answers and some clarity on those relationships. Again, I really do think that for the most part, the main focus right now is that withdrawal, because there is a sense that there is potential for something obviously there's kind of agreement across the board that this has been a very messy withdrawal, but there is potential for it to get worse. And I think that's what everyone, at least in D.C., is their primary focus right now.
Emily, there was also a lot of talk how President Biden was losing popular support and how this was going to impact his domestic agenda. Has that pressure ended at this point? Have we already seen the bulk of the potential decline in his popularity and any pressure that might have otherwise resulted on the bills that he's trying to get passed?
I will say, obviously Biden's rating, it could go lower, it could go higher. I mean, it's probably going to waver a lot within the next 3 years. I think the key thing to think about here when you're talking about Afghanistan's impact on the domestic agenda is that even though Democrats within Biden's own party have heavily criticized this withdrawal, they want to see his domestic agenda pass. And when you talk to lawmakers in the halls of Congress, they really talk about those issues as two separate things. That yes, they're doing investigation and oversight, they're getting briefings on Afghanistan, but it's almost completely separate from the work that they're doing as they get the details of that budget reconciliation together and prepare to put it all together in September and according to Democrats' plan, pass it before the end of the month.
Emily, do Washington insiders think the Taliban want political recognition? Do they need aid from foreign states, and therefore do they think that they can talk to them and have red lines that they would actually adhere to?
I think that's a big question sort of going in now and exactly what that looks like. I mean, there were a number of countries that did sort of come out the other week and saying that they would not have negotiations with the Taliban. They would not recognize a Taliban-led government. I think the question is sort of how does this develop? What happens next? You saw the Taliban go on sort of a term offensive, saying that, that there was going to be fewer restrictions on women, that they'd be able to go to school and go to work, but there's a lot of skepticism around that. What does that actually look like? And I think part of this is going to be seeing what does that government become, how legitimate are they, and is this something where other nations are willing to accept and to work with them?
And Joe Biden also meeting with the Israeli Prime Minister today. How much will they talk Afghanistan and Iran?
Definitely, I think both are absolutely on the table. I mean, definitely in regards to Iran and to the nuclear agreement, there is growing recognition within the U.S. government that they might have to take a different tact in these negotiations, just because you do have a new government that is a little more hard line, and trying to figure out a way to get to yes with them will be different than how to get to yes with the former government.
Emily, thank you so much. Emily Wilkins in Washington. Lisa, I want to go through the bond market right now. Let's do short duration first. Overnight repos out to new highs, well out over 1.1 trillion. The 2-year yield, I'm sorry, Lisa, that tells me some information from 0.20 out to 0.24 in the 2-year right now.
And this is the big question, actually, with respect to taper. It's how long is it going to last? What is the plan? What is the connection between the tapering of monthly bond purchases with the schedule for when they raise rates? And it seems like people are perhaps upgrading their forecasts for that touch. But honestly, Tom, it's been all but a flat line, right? I mean, the threshold for the Fed to move, to raise rates, to tighten in that level is so high.
Yeah.
And so, again, a key question tomorrow with Fed Chair Jay Powell, how much will he disassociate the idea of taper from that rate hike that many people don't expect anytime in the near future?
Well, that'll be easy language for him, but he's got to confront a 134. I mean, if you go 112 to 134, call it 15, 20 basis points, and you add another 20 to that, do it again, you're out to 150, 160, and then the market tells him what to do versus him telling the market what to do.
Yeah, Bob Michael of JP Morgan yesterday saying that one thing giving markets confidence is that the Fed will respond if there is a hiccup, and a hiccup could just be a sell-off, and we've seen that. So at what point are they backstopping the market indefinitely?
Francine in London says, do some currency data. Okay, we'll do currency data for Francine. Sterling right now, 137.44 on sterling. Francine in London demands, Notting Hill, demands that I do euro sterling. It's 0.856 Michael Spence. I don't know what that means, but that's what she said to say. This is Bloomberg. Bloomberg Surveillance. Good morning, everyone. Great that you're with us. John Farrell off, Francine Lacqua in for John, Lisa Abramowicz, and Tom Keene. Red and green on the screen. Not much going on. The VIX hasn't moved since time began. 17.44. Yields are higher. We notice a 2-year yield of 134, rounded up to 135 right now. That is a substantial 3-day move into this Thursday. We'll see what happens here off of claims. At 8:30, dollar quiescent. Euro dollar we're watching really legging out for that 116 print for a cup of tea, not coffee, out to 117.73. So on the edge of 118. We'll watch it on euro as well. Right now, someone who has a wonderful, optimistic cast on the American economic experiment, Drew Mattis joins us from MetLife Investment. Drew, thank you so much for joining. You have such an optimistic view. What is your view on GDP, say, 12 months out? Is the gloom crew overwrought?
They're actually not. It's the people who are getting very excited about things who are kind of overdoing it. If you look at everything we've been through, it's not clear we went through a recession, so therefore it's not really clear we're going into kind of a recovery. And by that I mean a normal recession, normal recovery. We're watching a few things pretty carefully. Obviously, the restart of schools is going to be important to the labor market. If you look at all the people who've left the labor force, they are heavily, heavily weighted towards single people. And so, what's keeping them out of the office is, healthcare concerns, childcare issues, and probably to some extent the government benefits that are now expiring. So we need to see how those people re-engage. We need to see the supply chains begin to function well again. And none of these things have happened yet. So I think people who kind of came into this year thinking we were going to see 7% GDP growth, they've now taken their number down. The Bloomberg consensus is now all the way down to 6.2. At MetLife, we're at 5.5. And I've been there since the start of the year, and I'm pretty happy to stay there.
I mean, it's a nice trend down, to say the least, in the labor economy. Now, Chairman Powell's got to fold us in. My basic take, Drew, is Chairman Powell does not have enough information to make a splash in this speech tomorrow. Isn't he, like everybody else, waiting for the jobs report September 3?
Well, I think that's right. I also think if you look back at the minutes of the last FOMC meeting, what did you have? You had the staff telling him that there were downside risks to growth and upside risks to inflation. And, that's not something he's going to want to have heard. And it's going to be something that he really is going to want confirmation on before moving forward with any sort of tapering talk and the like. I would also add that, the Fed had a bad experience the last time they floated a taper at Jackson Hole. So most likely this is not the place where they're going to float the taper more aggressively, simply because of the history.
Yeah. Well, Drew, when you talk about inflation, I want to go back to one of the points you made initially about supply chain disruptions and how this has been framed as a transitory event. It is going on for much longer. People expect it to continue the disruptions far into next year and beyond. If you take a look at just even how much it costs to ship goods from one place to another, I mean, it's increased in some ways tenfold. So at what point does this not become transitory? Does this become a serious structural existence, a structural pressure on inflation that we have not seen in decades?
Well, first of all, it's a structural pressure on growth, right? Because if you don't have the product, you can't sell it, and so it doesn't show up in GDP. So part of the reason GDP is underperforming is because of these supply chain issues. On the inflation side, I think that's already happening. I think that's what you're seeing in the consumer sentiment inflation readings. If you think about inflation, you can think about it two ways. You can think about it as, prices are going up of things I want to buy. The other side of it is, can I get the things that I want to buy, right? And so really, if you take it more holistically as a standard of living approach, standard of living is going down because these supply chain disruptions mean that you can't buy what you want to buy when you want to buy it.
But Drew, this goes to the whole stag-light or stagflation-like kind of discussion and how the Fed participates in this, right? I mean, if this is something out of the purview of the Federal Reserve, out of the purview of labor markets, how does the Fed respond to something that is pressuring growth because of inflation that they supposedly have a mandate over?
Well, so I think that's an interesting question for Powell, particularly as he's going towards his reappointment or potential reappointment, which is part of the things that they're pushing people to buy ever more goods and services had been a lot of the fiscal support that they've received from the federal government. Do you lean against that, right? Because that's just creating more demand when we're unable to fill the demand we have. It's a real big question for Powell, and it's one he's going to probably take a pass on. Quite frankly, he's going to wait this one out. And see how things develop. Stagflation light, though, it's a little much to argue. We're at 6% GDP growth, all right? We're expecting 5.5%, market's expecting 6.5%. Let's split the difference. You get 6%. That's not stagflation light. That's a strong economy with a lot of inflation. If you get half that, and then you're seeing these inflation readings, then you've got a problem.
But Drew, let me take the outlier call. So the EU today is thinking about stopping Americans coming over without having to show vaccination status and things like that. And because the Delta variant is getting so much worse in the U.S., how can Jay Powell not address that?
Well, the question is, are people beginning to live with it? And this is where, the ultimate question has always been, what is the end game for COVID? And I think, right. I'm not an expert, but a lot of the experts say it's going to become endemic, right? So, it's not the flu, but it'll be like the flu. There'll be seasonal waves. There'll be all this kind of things. And you'll probably get, vaccinations for it and be able to fight it off. And it'll just kind of fade into the background. Once we all start paying attention to hospitalization numbers instead of case numbers, that's when we'll know it's over from kind of a consumer standpoint. What we're looking for in the near term, though, is can schools reopen and how long do they stay open? Because if schools can't open and stay open, then we're going to have issues with pulling back potentially millions of workers who are associated with that, who are having other issues that require really schools to be open for them to go to work. that'll improve the labor market situation and the overall health of the economy.
I mean, there's this awesome, it doesn't apply to me, this awesome study. I don't know if it applies to Tom and Lisa, but it basically says that if you work from home 1 day a week, your productivity increases by 4.8%. How will that change? Actually, if we have this hybrid model of working from home a couple of days a week, how does it change our economies going forward?
Well, I'm not, so I haven't seen the study. I did read the story on it. I will tell you from my own perspective, I'm not really sure how much I believe that people are that much more productive at home. Maybe as productive, I can believe that. I'm not really sure they get a giant boost from it. I think the idea of having time to yourself to think about things is great, but having time to communicate with other people and think about things collectively can also be helpful from a productivity standpoint. And I think, it's not everything is kind of a win-win, right? You're winning something, you might be gaining something, and maybe the net is positive, but you're also potentially losing something on the other side of it. And I think that's why, a lot of firms are kind of leaning towards this hybrid model where, they're trying to get the best of both worlds. And I think that there's a reason for it. And my guess is that, if they thought they could double productivity by having everyone stay at home, I think every firm in the world would tell us just to stay home.
Drew, you had a legendary career at UBS. Optimism, you and Maury Harris just quarter after quarter after quarter nailing the statistics. You're now at a stodgy insurance company, MetLife Investment, and they lean forward and they say, Drew, bonds. How do you advise institutional bond portfolio managers in this crazy bond market with no coupon, with negative yields? What do you tell these people?
I mean, there's always a place to look, and there's always something you're trying to achieve. And so it's a matter of what you're trying to achieve. I don't think we're stodgy at all, actually. I'm doing more interesting things here than I did anywhere else.
Explain that. No, there's a stereotype here. Tell us why MetLife, a wonderful August company, why is it not stodgy?
I mean, if you look at the breadth of assets we can invest in, everyone thinks, insurance companies and their, investment arms that are related to them is just, fixed income only. And there's truth to that, but, our firm does a heck of a lot in real estate. We do a heck of a lot in agriculture. We do a heck of a lot in privates and doing, structured finance. And our public fixed income team is awesome. And it's, you're actually getting, kind of just a much broader view of kind of investments than an investment bank where you're just you're getting rid of one asset and buying the other, and it's constant flow back and forth.
Okay, that is how we call a diplomatic answer to Tom's very rude question. How are you not stodgy? You're just a stodgy person.
Come on,
He's like,
it's a
no, I'm not. I do a
stereotype.
lot of really interesting things. And you're never stodgy.
Lisa Mattis is talking about real estate in MetLife. The only real estate is if you go over to the benefits page of MetLife, they have Yankees tickets. That's the real estate that matters.
Tom.
Drew Mattis, thank you so much. Really appreciate it with MetLife Investment. Yes, I'd love to see Yankees.
Save Drew.
Red Sox, Drew, at the end of the year. I'm kidding.
What a way to lobby for
Lisa, that's really, really interesting. I mean, the institutional pressure, not the retirement pressure, but just what do you do with gazillions of dollars in this odd bond market is not a small question.
And the path of yields in an era of such confusing inflation. I mean, I have never been more confused about inflation than I am right now. The more I study it, the more confused I get, Tom. That has been the case. And when we look at some of the supply chain disruptions, we look at the changing economy in China versus the U.S., and we look at, for example, what's going on with Vice President Kamala Harris over in Vietnam, talking about how to shift around some of these supply chains. I mean, so many question marks. And then has the Fed even engaged with all this?
Right. Francine, is the city open? I mean, Drew Mattis was talking about everybody getting back to work. I was in Midtown Manhattan yesterday. Is the city picking it up again? Canary Wharf and the rest?
The city is open. We used to have something called the pingdemic, which is when somebody tested positive, another 10 people that had any interaction with that person went home. That stopped. So actually, the city is buzzing. A lot more people. No tourists yet, Tom, because of some of the travel rules. But actually, I think there's like 40% occupancy at the moment in the City of London.
Okay, well, we'll continue here. The yield 1.35%. This is Bloomberg.
With the first web news, I'm Rich Kigup. The US and UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. The Biden administration says it knows of about 1,500 Americans who are still in the country. Japan has halted use of 1.6 million doses of Moderna's coronavirus vaccine. Several vaccination sites reported foreign particles that were found in the vials of the vaccine. There have been no safety concerns tied to the vials so far. Moderna says manufacturing issues arose at a contract site in Spain. Bosses in Manhattan have lowered their expectations for a return to office next month. Cases of the Delta variant are on the rise in New York, and a survey by Partnership for New York City says employers now see 41% of office workers returning by September the 30th. That's down from an estimate of 62% in May. Salesforce saw its quarterly sales jump and boosted the forecast for annual revenue. It's a sign that businesses are speeding up spending and are buying a broader array of products. Salesforce is the top maker of cloud-based consumer relations software. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Kigup. This is Bloomberg.
The challenge with boosters is knowing who you've already vaccinated, where are the gaps, and how do you administer a second dose of vaccinations. And it requires a lot of micro planning. What's worrying to many of us is going to be that by the time we need the booster, the infrastructure is not going to be there because we're still going to be vaccinating people in the first round.
Bhakti Hansadi, Johns Hopkins University, expert in emergency medicine. There is a nuance, there is a simplicity of the day after day grind of this pandemic. It is time now to talk about the little critters that we are scared of. Stuart Ray is more than interesting. He is in infectious diseases at Johns Hopkins. He is someone familiar with HIV, familiar with hepatitis C, but far more, it's a path from Caltech to Vanderbilt and just bulk research in all of these little critters. Stuart Ray, when you hear the simplicity of the media and the punditry talking about this pandemic, what's the observation you want to tell us about this odd and unique virus?
Well, it's great to be with you, and I have to say that we've learned a lot, and the thing that I think we should understand is we need to use that learning. We know that vaccines are the factor that seems to be controlling deaths and hospitalizations in places where we have high vaccination rates. You look at Iceland, where they've had a big spike, but very few deaths. And then we also know that masks, or actually respirators, are a very effective thing that we've underutilized. And if we just use the tools that we have in hand, we could have a big impact on getting back toward normal.
The hallmark of your work is the mathiness of it. Caltech over to Vanderbilt, and that, as you know, these are all differential equations, smooth dynamic curves. Which of the curves is the greatest mystery to you right now?
Well, I think that when we see the downturns in cases and deaths in the UK and India when the Delta variant first came up, we have to wonder what caused that negative deflection after the big spike. And I don't think there's any chance that immunity was the reason for that. That's change in behavior. And I think we underappreciate how important behavioral change is. And when the shock and awe of a big spike happened, people start changing their behavior and we see it blunted. So we need to realize that we need to use that behavior strategically, and we need to reinforce it by making sure that good protections like vaccine and masks, respirators, are available to people everywhere they need to go. We need rapid tests to help blunt that spread, and we just are not doing a good enough job with those things.
Dr. Ray, are we ever going to put our masks away? Are we going to be wearing masks in perpetuity as we deal with an ongoing COVID virus that remains in circulation?
I think that we will be able to take the masks off much of the time in the future once we get to a point where we're sort of in a steady state and we have people protected against the severe complications. Right now, we still have 20% of Americans over 65 who have not been fully vaccinated, and that's a big gap that we need to close. those people are very vulnerable. And now with the Delta variant, we're seeing more complications in younger people. So we really are not at a place where we can be surprised we need masks, because we haven't done a good enough job with the first layer of protection, the one that lasts for months to years, which is vaccination.
And the other side of this is therapeutics, how effective some of these treatments are for the most ill from the virus. Drew Mattis of MetLife, an economist, actually was just on the show, and he had this to say, that when we start talking about hospitalizations and not deaths, that's when we know it's over on a consumer level. How far away are we from talking only about hospitalizations from COVID and not deaths?
Well, I think that we're getting closer, but we can prevent those hospitalizations, which are really the step toward death, with better prevention. The therapeutics we have are effective once people are getting sick, but an ounce of prevention is worth a pound of cure. And when we have someone hospitalized, we're using resources. You see the oxygen shortages in Orlando and other places, and we know that we really are not in a place where hospitalizations are something we can discount. So the therapeutics we have are somewhat effective. We have some new ones that are probably going to come out that'll be a little more effective. So we have some things we can do for sick people. But what we really need to be doing is preventing those illnesses. And we also have to appreciate there are a lot of people suffering long-term complications after COVID that we still have not really gotten a good handle on.
Dr. Ray, I know vaccines save lives, but actually are vaccines working the way they're supposed to if so many people still catch it, maybe less deadly, but still catch it 3, 4, 5 months after they had their both shots?
Well, vaccines have multiple effects. One of them that is very hard is to keep the bug from getting on you. We think about staph infections, and everybody carries staph around on their skin. Our immune system can't keep staph off of us. And I think it's worth thinking about the fact that this virus, when it's in your nose, is on you, but not so much in you. I don't know that we're going to be able to prevent those infections on us, but people who are vaccinated have the virus in their respiratory epithelium for a short period of time compared to people who are unvaccinated or not immune. So if we could get people protected against the severe complications when the virus invades that epithelium and gets inside you and causes the severe complications, we'd be in a better place. But getting the virus to stop spreading really means getting people to shed for shorter periods of time, which means being immune, being vaccinated, because vaccinated people produce virus for shorter periods of time and they have fewer complications.
Is winter dangerous because of further mutations that we could see?
I think that couple of questions is right on point. This is summer, and we can expect things to be worse in winter. They have been in the past, and that seems to be the pattern. We also have to understand that the Delta variant is not a static thing. It's evolving. We see data from the UK and elsewhere showing that mutations are accumulating in Delta. It's finding new pathways. None of those have been a big jump yet. But I think we have to understand that unless we contain the spread of this virus, every time a person's infected, it's a roll of the dice. Those random changes that happen occasionally give the virus a big advantage. And as long as we keep on giving it those rolls, it's going to hit a number that is a bigger problem for us. We don't know that that'll occur. There are some constraints on the virus because it has to be able to enter our cells. It has a certain lock and key function that is constrained. But we've seen it change a lot. And, where we thought we were in the spring before Delta really surged, we thought that things would be more normal. Now, Delta's changed that game.
Stuart Ray, thank you so much. Dr. Ray with Johns Hopkins, greatly appreciated his work in infectious diseases world acclaim. Lisa, I learned a lot there about, taking it from bacteria and staph over to the virology of all this. It's the granularity that these people are working in is not captured in the media frenzy.
Also the idea of how much virus becomes contagious, how much do we have to have on us in order to be contagious. I do want to have a surveillance correction. I said that Drew Mattis said that when we start to talk about hospitalizations and not deaths, that's when we know it's over. He said it's hospitalizations, not cases. But this, to me, goes to the heart of how do we know there's an all clear, and what does all clear mean if we still are wearing masks, if we still are social distancing, so we don't get the virus on us.
Let me do a market check right now. Red and green on the screen here. The VIX 17.41. It's really come into a Thursday lull, and of course that's a lull before claims at 8:30 and the Powell speech tomorrow as well. Curve steepening. Well, I'm not going to oversell it. 110 basis points. Somebody emailed in and said, are you having a decaf chai tea. Francine, Lisa, and I.
No.
There is no decaf chai tea on surveillance.
Espresso.
Taylor Riggs.
No
None
decaf
today.
anything.
Taylor, decaf chai tea. Afternoon.
There's endless reasons for optimism if, in fact, productivity growth is accelerating.
The powerful growth will continue into next year, and it is still too early to get positioned bearish on the market.
Right now, we're well past the crisis, and the recovery is underway.
This growth could be extended as we continue to deal with the push-pull of COVID.
The big problem, if we don't start tapering, is the pressure of inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. Ferro on sabbatical. Thrilled that you've considered his new book coming out. We look for that summer 22. I think so. In for John Ferro. Francine, Lacqua in London, which is a good and always beautiful thing as well. Lisa, let's get right to the moment here. At 8:30 today, we're going to watch claims. And Lisa, Chairman Powell is going to watch claims.
Yeah, Chairman Powell very much trying to get a gauge of this economy ahead of his speech tomorrow at 10 a.m. Eastern time. I do think there is a change in the tone in markets. We went from optimism to pessimism to now full-on bull. I mean, everyone cannot get bullish enough. And it's unclear what Fed Chair Powell will do with that. I mean, does that give him confidence to taper, or does that make him feel like everything is a go and he doesn't have to rock the boat?
What is the tone on the Bank of England, Francine, in London? Is there a taper frenzy there? I mean, what is the battle with Governor Bailey right now?
There is. So there's talk about a taper, but it probably would not come before the Fed, Tom. But look, the inflation is just very different here because we're contending with Brexit, because there's a severe shortage of actually workers almost for all industry groups. So it's drivers, it's people who pick fruit. It's also, the farmers, actually, because of Brexit, a lot of people went back to the EU. And so it's a small open economy, so it kind of comes at the UK from all sides. And the Bank of England is, in a tricky situation. A bit like the Fed, but also even more difficult because it needs to fine-tune its message.
We stop the show right now to inform you of news that matters. Francine, you mentioned in the last hour, there's a chicken shortage?
There's a chicken shortage because of a lack of drivers. So I've never brought you to Nando's because we usually go to fancier places, Tom. I know your standards when you come to London, but it's one of the most popular chicken places here in the UK, and they've had to close about 104 stores because if you're a chicken place and you can't serve chicken because there's a shortage of chicken, you're in trouble.
Okay. Why did we have Francine on today? There you are, your chicken update from the United Kingdom as well. We want valuable for radio and television coast to coast in America as we awake. Lisa, what we're awaking to is the one change this week. I'm sorry, the fact is yields elevate.
Yeah, that's true. They do elevate to 135, and that to me is a notable move. What's also notable is we've managed to get new highs every day, almost, although today we are a little bit lower. But the idea here, 51 record highs in 2021, with the most recent one coming yesterday. The fact that this just keeps happening, Tom, this is not, yes, it might be a sleepy market, but it keeps going higher.
It is there in 17.43 on the VIX. I'm using it as a casual bellwether. The pros are looking at other fancier messages of volatility, but it's a VIX that maybe should be 16, and it's not. It's 17.42. Bitcoin under 47,000. It is a plunge. It's a drawdown, I say, on Bitcoin. That'll be chapter, I think, 14 for John Ferro in Drawdown Meditation, the Ferro way. Curve steepening slightly with these new elevated yields. Brent, $72 a barrel. Francine breaks into tears over that statistic. Gold, $17.90 the ounce. And in the currency market, finally, a little fractional give back. I'm struggling here with the data check because it's August. Lisa will save us at the wall.
All right, we were supposed to get a 3-day confab in Jackson Hole. Instead, we get basically one day, or rather 1 hour. We get Jay Powell speaking tomorrow at 10 a.m. People are not gathering in Jackson Hole today. It is virtual, but we are going to get a curtain raiser. Today, we do hear from Kansas City President of the Federal Reserve, Esther George, who is joining our own Michael McKee on this program in about a half an hour time. Interesting to see how she frames this in light of the quick transition to virtual, the increase in Delta cases, and how that might affect policy and the discussions at this meeting. Then at 8:30 a.m., we've been talking about this all morning. We get those initial jobless claims. Interesting to me that Bloomberg Intelligence really put out an economics piece talking about how the decline in jobless claims really puts a spotlight on the real issue in the labor market, which is the friction. Where are the workers? Why are they not coming back to drive those trucks for Francine's chicken, to drive those trucks for Francine's milkshakes? Because evidently they also have milkshake shortages. So if you want chicken nuggets and a milkshake at McDonald's, it is going to be
in Liverpool
problem.
because we're saving money.
Yes, exactly. Thank you, Tom. And I'm sure you've done many times again. And then 12 p.m., we hear from General Motors CEO Mary Barra, who will be joining our own David Weston to discuss the path forward for a company that has seen the price of their cars go up dramatically, even though there seems to be a supply chain disruption.
But Lisa, she's got to talk about the electric car. You know, you got to take them into the shop because the battery's going to blow up thing.
The idea here of some of the regulatory scrutiny from the U.S. government, the idea here of what that bar is, if you will, and also what the competition is like at a time when any type of regulatory scrutiny really dampens potential interest.
We welcome all of you on radio and television, and this is the important conversation today of the emotion of what to do. You know the cliche, there's a wall of worry, and Daryl Cronk is esteemed and able to write about it at Wells Fargo. He is their chief investment officer. Daryl, I love your note because you go to the emotion of this. Forget about Febosi, forget about the textbooks, forget about all the fancy stuff. You say, here are the worries, you got to fade these, you got to follow closely these, and you got to fear these. Let's start with fade. What do I fade here on the worries that I can ignore?
Well, I think there's a good morning, Tom, first of all, and good morning, Lisa and Francine. So I think there's a number of them that you can actually fade. This one may be a little controversial, but I think from an economic and capital market standpoint, Delta is one of those. You can't fade it from a health standpoint, but I think you can fade it from the economy. Just note the 20% up in the S&P, 51 new highs. That was just discussed. You know, there's some violent rotation under the surface, from growth to cyclicals to bond proxies and back again. But beyond that, markets still move higher. I would watch the debt ceiling. I think you got to fear the debt ceiling.
Really?
September is going to be a white knuckle event. I mean, you've got a whole bunch of things going on there with the budget resolution. You've got perhaps certainly the debt ceiling, and we're in extraordinary measures. You've got the reinstatement of Powell.
Daryl, this is important. I want to underscore this. September is going to be a white knuckle month at a time when we have all bears basically blown out of the water and everyone trying to get more bullish on absolutely everything. Do you think that this is a problem setting up for sort of a perfect storm, if you will, in the next few weeks?
Yeah, I do think it. I think it's going to be a lot of headlines, I guess is what I'd say. You've got the bipartisan infrastructure package. You've got a $3.5 trillion spending budget legislation. You've got a potential government shutdown. You've got the debt ceiling, and you got the reappointment of Fed Chair Powell, all of which has to get somehow resolved and progress in September. We know where the partisan politics are. So this is a real risk. You'll remember, 10 years ago this month, it was August 2011 when we downgraded the U.S. debt as a result of the standoff. So that had a 24% decline in consumer confidence and a 17% decline in the S&P. So, look, I think at the end they do find some resolution, but it's not going to be without some of those white knuckle events. And I think it's going to create a September to remember out of Washington.
I like that, September to remember. Daryl, how much white knuckle events will come from currency volatility? And actually, how will that, if we have a volatile dollar going into a Fed meeting, how much will that liven it up?
We actually think the dollar is kind of in a near-term peak. We think it's in a longer-term kind of channel sideways trend, but a near-term peak with some weakening here, which is part of the reason you're getting a little bit of that bullish sentiment. People are turning things back on. I think what's interesting here, though, is if you get under the surface, right, pay attention. I'm paying attention to high yield spreads and credit OASs. They're up 50 basis points in the last 6 weeks, right? They're quietly leaking higher, right? So we need to pay attention to that. You've got emerging markets are now negative year to date, and you got copper and oil both off double digits from their previous highs. So there are some things we've got to pay attention to here.
Dale Cronk, thank you so much. Too short a visit. We got to do this longer next time. With Wells Fargo, their chief investment officer. You know, Francine, I know that you haven't been doing this with us in the American morning, but there is a pendulum out there, and it is a pendulum of a perfect storm. Farrell just emailed in. He's like doing a Gilligan's Island thing. He's in the Pacific. I don't know. Is he in Tahiti or Fiji or?
He's going. He's writing his book on meditation.
Yeah, he is. But I think he's drinking Fiji water in Tahiti or something like that.
Try.
Lisa, help me here with the pendulum of a perfect storm.
Well, the idea here of the potential political risk, especially with the debt debate. Well, that's what he was talking about. And he had, September to remember, a perfect storm. He's got great catchphrases. They'll make a great analytical report. But honestly, you look out over the next couple of weeks, and given how bullish people have gotten, is there that fragility? And we're not hearing a consensus around that at all, actually.
I know what Francine's going to say, Lisa. She's going to lean back, because I've worked with her for years. Here's Francine. Lisa, have an Aperol spritz. I mean,
okay, let's hear it.
Into September.
Francine is
what we haven't talked about?
Please.
China regulation. This has been over the last 2 weeks. It's basically China selling off, European stocks kind of, getting their impetus from China and the Asian markets, and then you buy the dip in the U.S. I don't know how long this lasts into September.
Well,
back to Aperols, Tom.
I mean, Lisa, again, that goes to the point of a white knuckle September. And to Francine's point, we've heard from Endicott and others about the important political meetings in China at the end of this year and into next year.
Honestly, the most amazing aspect of this is it seems like a sea change, and the reaction in markets is, meh, you can get yield. Meh, the Fed will come in. Honestly, it has not been significant.
Yeah. It's like the Red Sox pitching staff. Let's just cut to the chase. It's going to be the Andrea Gale of Septembers. Of course, that from a wonderful book from 1997. A Perfect Storm, The Perfect Storm. Futures at -4. Dow futures go the other way, up 10. Please stay with us on the equity market. Sam Stovall, CFRA. We do that next. This is Bloomberg.
With the first word news, I'm Rich Kigup. To the US and the UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. The Biden administration says it knows of about 1,500 Americans who are still in the country. President Biden and Israel's Prime Minister Naftali Bennett plan to discuss strategy on Iran today at the White House. Both countries consider that Iran is speeding up its nuclear program at an alarming rate. The U.S. favors a diplomatic agreement to halt the nuclear activities. Israel has said it may use secret attacks. The labour shortage in the UK is leaving consumer businesses pessimistic. That's according to the survey by the CBI. Britain's biggest business group, the survey found optimism at -17% this month. That's down from a positive reading of 47% in May. Businesses such as restaurants and bars can't find enough workers to fill jobs after the lockdown. And Bloomberg's learned that Western Digital is in talks to merge with Japan's Kioxia. A deal involving the two chip companies could be worth more than $20 billion. The companies are longtime joint venture partners. A combination would create a bigger competitor for Samsung in the market for memory chips. And shares of China's Evergrande's electric vehicle unit are collapsing in Hong Kong. It's a rout that has wiped about $80 billion from what was the company's most valuable listed asset. Evergrande is the world's most indebted property developer. There's concern the world's most indebted developer will need to sell assets at a steep discount. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
At the end of the day, there's got to be good, remunerative job opportunities for middle-class and lower-income Americans paying rising wages. And that's what we have, with a robust recovery behind us, strong tailwinds, strong job gains, wages going up,
and very closely connected, of course, to the rescue plan.
Jared Bernstein of the Council of Economic Advisors, speaking of the Biden plan, of course, of $1 trillion or plus overlay expected to be on there. As we spoke to Emily Wilkins in the last hour about Afghanistan, about an eventful day, particularly near the Kabul airport, we now turn to Washington politics with Anne-Marie Horner, our Bloomberg Washington correspondent. Anne-Marie, I look at the infrastructure bill, and what is so telling to me is it's nowhere to be found in the debate of the zeitgeist of the Washington Post this morning. It's as if we had a vote, Pelosi won, and boom, it's gone. How gone is the infrastructure bill until September?
Well, you make a good point, Tom. The papers are just filled with what's going on the foreign policy front with Afghanistan, as well as the Israeli prime minister visiting Washington, D.C. and having a meeting today with the president. But I would also say we are seeing a little bit of scooplets come out in terms of what the House and the Senate and these committees are starting to draft up in terms of language. Overnight, we heard about one about conservationism when it comes to natural resources. Some House Democrats want to spend some $30 billion. Some of that, they would get that money between a little bit more penalties and royalties on oil and gas and pipeline companies. So as we lead into September, you're going to hear a little bit about where these Democrats are moving in terms of what is going to be the details of that $3.5 trillion package, but nothing is going to be set in stone until September.
Nothing's going to be set in stone until September. Well, we got to get to September, and part of that is a constituent reaction. What are the politicians hearing about an overlay of, as Lisa said earlier, $2, $3, $4 trillion of new ideas?
Well, we just don't know yet because every politician is selling it at home very differently. The progressives, of course, are saying we have about 5 agenda items we want to be in this bill. A lot of that has to do with social programs and climate initiatives, while you have a little bit more of the centrist moderates saying, don't freak out just yet. We're still negotiating this, and $3.5 trillion is a top-line figure. Remember, this budget resolution is just a framework of potentially what we could see. No one thinks, and we spoke about this yesterday because I know you had Greg Vallier on, no one really thinks they're going to get $3.5 trillion. That number is likely going to come down.
Anne-Marie, a lot of this does dovetail into the debt ceiling negotiations that may be a white-knuckle event, as Daryl Cronk was saying from Wells Fargo Investment Institute just recently. I'm curious from your perspective how far we have gone in terms of negotiations of the debt ceiling debate, of lifting it or prolonging it to enable the economy not to default, the United States.
It's an excellent question because it's about the fiscal health of the United States, and these conversations have been very muted. Of course, this week was all about the debate within the Democrat Party about moving forward that rule of the resolution and putting a firm date on the bipartisan infrastructure. But when it comes to the debt ceiling, the Republicans just continuously push back and basically consider the conversation mute. They say if the Democrats are going to already have a budget reconciliation program, they need to just put the debt ceiling in that. But the Democrats, especially leading up to the midterm election, don't want to be the ones to have to edit that into their $3.5 trillion reconciliation package, because they don't want it to be seen that they are being reckless with the U.S. finances. They want this to be a bipartisan approach. There is going to be a lot of back and forth on this between September, October, and when the CBO says October, November, the U.S. could potentially run out of those funds. But this is at the moment just completely mute because foreign policy has completely taken center stage in Washington.
Anne-Marie, how much is the president also focusing on some of the cyber attacks and ransomware? So yesterday he met up with prominent chief executives to discuss that. I mean, are we going to see more of an effort after the pretty difficult summer months we've had on that front? Is he going to step up the efforts to try and do a U.S. counterattack?
Well, we have the executive orders earlier this summer from the president directing the agencies to really step up the cybersecurity. And yesterday, when you have dozens of executives coming in, this was really more of a summit, the first start of how the private-public sector can work together. What was so interesting, I think, about his remarks yesterday is that he did call out Russia. He said that we know that some of these ransomware attacks come from the likes of Russia. That was in May. We know when the Colonial Pipeline attack also last last year with solar winds. And he said that he looked Putin in the eye at this Geneva summit and said, we want you to take care of these groups that are operating in Russia, quote, because you know who they are and you know where they are. So it is a little bit of a geopolitical concern as well for the president.
And there's also an issue of the Afghanistan, just going back to the what largely is thought of as a debacle of the withdrawal and the manner of the withdrawal, not the actual withdrawal itself. And I'm curious, from your perspective, how much the cybersecurity issue dovetails into increased terroristic threats, including potentially stemming from that nation.
Well, I think the foreign policy team in Washington for this administration would say leaving Afghanistan, part of that was to put money towards where the future potentially of those threats could come, like cyber warfare, which over the past year we've seen a number of attacks from actors, especially in Russia and China. This withdrawal, though, certainly center stage as we have only a few days really to get the civilians out, and Secretary of State Anthony Blinken yesterday saying about 1,500. Key here, though, is American citizen, blue passport holders. There are a number of other people there who also have rights to America who are green card holders. These people need to come out before the military starts to wind down. And right now, from what I'm hearing with people who are also trying to evacuate and journalists on the ground who I know are trying to get family out, is that it is very difficult to get anywhere close to the gates and letting the U.S. military to get on the tarmac to exit Afghanistan. And overnight, in the middle of the night at Kabul, right now it's the afternoon, but in the middle of the night last night, the U.S. Embassy in Kabul released a security alert saying, if you're anywhere near these gates, please go home and we will direct you to the airport, because they're quite concerned about a potential terrorist attack at that airport.
Anne-Marie, thank you so much. Anne-Marie Horton in Washington this morning. On the markets, again, it is a churn to August, awaiting 8:30, about an hour and 6 minutes away on claims. We'll have a lot on this as well. Lisa, we've got some serious anticipation of one of the more conservative presidents of the Fed.
Esther George, she's joining us in just about 5 minutes with our own Michael McKee. Curious to see how she frames out this conference and also what she says about the sudden reversal. I mean, honestly, they were planning Jackson Hole, all of those hotel rooms canceled, all of those flights, just days before the conference, saying, we can't do it in person.
Well, no, we can't do it in person. I'm sorry, it is a different conference, and certainly a different conference for the raison d'etre of it, which is the PhD papers and the discussions around those papers, which at time when everyone's together really can get heated. I mean, there can be some real emotion. I saw Willem Bouder once, Francine, almost punched the great 7-8 foot bear out in the lodge. He took a swing at it. He was so angry.
I mean, that's, I'll never forget that image, Tom.
Well, we got
maybe they'll do that with inflation.
Important discussion coming up for those of you interested in the monetary state of the nation. The president of the Kansas City Fed next with our Michael McKee. Again, red and green on the screen. Stay with us. Claims in an hour. This is Bloomberg. Good morning, everyone. Bloomberg Surveillance. Francine Lacqua for John Farrow, Lisa Abramowicz, and Tom Keene. Interesting morning. Yeah, it's August slow. I'm not going to give you a line here, but we're watching the data, particularly off claims here, in exactly 1 hour. Michael McKee will wander by in an hour for claims, add value. John Riding scheduled to be after Mr. McKee. But right now, McKee begins his work at Jackson Hole. The number one issue is taper. No, not the economic taper. The taper of my waist after 3 meals at the Pioneer Grill. Guess what? It's not going to happen because we've gone virtual. McKee is virtual, and the distinguished Esther George is virtual. Let's listen.
We had hoped for an in-person meeting. We had planned that way, knowing in the back of our mind that that would be a function of how the virus unfolded. And as we saw last week, risk levels went up, and in the interest of our guests, we pivoted to a virtual platform. So disappointed, but still looking forward to a great conference. We've got a great lineup of speakers and papers that I think are going to bring insight to an important topic.
Well, you lead into an important question, the latest COVID spike. How do you think that is going to affect the economy?
Well, I think it's a risk to the outlook, but what we've seen so far and what I hear from contacts in our region is the economy continues to grow. at a strong rate. Consumers are still spending. The labor market is continuing to heal. We saw good job gains last month. And so the outlook, I think, remains a positive one. We will have to see what impact this flare-up in the virus might bring. So you could imagine that it might slow down some of the returns to the labor market, but I don't expect at this point that it will derail the economy as we saw last year when we first had to deal with the virus.
Do you think it slows down your timetable for when you might want to taper because you might want to wait and get more data?
I think for me, as I look at the progress that the economy has made so far, it really does suggest that we've come to a point where we can begin to ease up on the amount of accommodation provided to the economy. That's different than suggesting that we have arrived at the objectives that we have in terms of full employment and price stability. So I don't think that it changes my own calculus that it is time to begin to make those adjustments given the gains we've seen so far.
Have you gained enough on the employment side, especially in the diversity area? Have we seen enough progress in terms of getting minority unemployment down? What's the labor market picture like?
Well, clearly, we have not seen the labor market fully recover. And there's still slack there when you look at millions of people that have not come back into the workforce, not yet resumed working yet. And as you noted, when you begin to drill down into who's recovering, who's not recovering, we know that there is disproportionate outcomes right now for Black and Hispanic workers. That, I think, is a function, again, of watching how the labor markets heal and how the economy recovers. And to the extent some of those contact-intensive sectors can continue to bring jobs back on, and we saw that last month. We saw leisure and hospitality come in pretty well. If those kinds of gains can continue at a healthy pace, then my expectation is we will continue to see the impacts begin to narrow across many dimensions of the labor market, and that would be a good sign.
Is there any division on the Open Market Committee about when to taper? Wall Street's making a lot out of the fact that some people think we should wait till the end of the year, and some say we haven't seen enough progress, and then there are people like you and other colleagues who say we've made enough progress to begin thinking about it.
So this is a big committee, as you know, and one of its real strengths is the diversity of views it brings to looking at a common set of data. That's a healthy discussion, and you often see those differences emerge at the point that the economy is turning. So it's a healthy sign for the committee to begin to debate and deliberate on those issues as we judge when we've made progress toward the objectives that we've set out for the economy.
Yeah, I'm just wondering if Wall Street's making too much of it, you know, the idea of whether you say something in September or November, is that cutting the policy too finely?
I think what we've been focused on, and you've seen, is a commitment to communicate clearly, to make sure that we are being transparent about the factors that are being considered for that transition as it relates to asset purchases. And I think that's what's been happening. The markets, the public has been hearing those communications. And of course, we're coming into a meeting in September where we will continue to talk about how the economy has unfolded and the timing for adjustments to those asset purchases.
Interesting story today about how Wall Street doesn't care as much about when you begin the taper as when you end it. What's your view on how fast you would want to get out of the QE business?
So I think it's important to get started, and the conditions of pace, timing of when we end, I think I'm open-minded to listening to the debates around that. But I am less interested in deferring that decision. So I think it's important to really center on when we believe the progress in the economy is sufficient to start that process. And that's really where I'm focused. In that sense, I think we should get started this year so that we can begin to pare back the amount of accommodation, watch to see how the economy unfolds after that, and then down the road be in a position to make decisions as the economy changes on what we need to do with our policy rate.
I'm going to guess that you would agree with Chairman Powell that tapering is not tightening and that the two are not connected. But the way traders see it, you at this point, because of what the chairman has said, aren't going to start tightening until you're done with tapering. So there is a bit of a connection on the back end. And I'm wondering if you agree with the members of the committee who say we should get it done faster than we did last time.
I think there's good arguments for that. Again, depending on how the economy unfolds. The arguments that ending the asset purchases will give the committee some flexibility to judge the progress in the economy. But I don't think that's in any way a mechanical decision and one that we can lay out today, whether it's a certain amount of months. The conditions really that have been laid out in the guidance from the committee has been that we will have achieved maximum employment and price stability objectives when that rate decision is made.
Whatever decision you make about the pace of tapering, you're doing $120 billion a month right now. At what point would anybody even notice in the economy?
Well, I'll be watching for that. At the point that begins, because it is a tremendous amount of accommodation going into the economy right now. And assuming communications have been laid out and the committee's response to how the economy is unfolding is clear, you would expect the economy to be able to work through that. And that is my expectation, that with good communication, with clarity around the factors that we judge are pushing us toward our mandates, that will all work out in terms of the economy's ability to absorb that.
The minutes of the last couple of meetings suggest that you've all basically agreed that you've essentially reached your mandate on the inflation side. So I'm wondering where Esther George, the inflation hawk, is at this point. What do you think about the progress of inflation? And do you have some concerns that maybe it's not transitory?
Well, I think watching the level of inflation right now certainly has gotten my attention. It's gotten the attention of many households and businesses in my region that frankly hadn't had to think about inflation for many years in their decision making. So it's not something to ignore by any means. Having said that, I do think that it is reasonable to assume that what we're seeing right now is coming from the combination of robust demand running up against supply constraints. And that, of course, is keeping upward pressure on prices. Over time, I would expect that to moderate. And that, I think, is a reasonable assumption to make. But that, of course, will depend on a variety of other factors. To what extent does risk from the virus affect those supply chains? Will they become more persistent? Will it begin to build into people's expectations in a way that will cause us to have to rethink that policy accommodation different than we are today?
You've always been on the lookout for inflation and one of the first to warn about the possibilities. So I'm wondering if you think we would have time, or you would have time, since I don't have a vote, you would have time to react if inflation proved not to be transitory and that you're not behind the curve.
So it's hard to say today, given where we are in this recovery. Certainly, the committee has the tools it needs to respond to inflation. That, of course, is always a function of understanding what's going on in the broader economy. And it's hard to judge, but I think no one should question that the committee is committed, that I'm committed to a 2% inflation objective over the long run for the economy. And we'll just have to see how this transition in the economy from a terrible pandemic shock to beginning to recover from that unfolds.
I have to ask you one last question on a fiscal side. Leaving aside the merits and the partisan issues involved in the budget that was just passed by Congress. Do you worry that billions more, hundreds of billions of more in spending would be inflationary?
So I think the question of fiscal spending is one that I'm going to defer to fiscal policymakers to judge. I think as a monetary policy maker, I will be watching carefully any number of impacts to our economy, including fiscal spending, to understand how it might change the dynamics for how we achieve the objectives that Congress has given us.
I actually have one more question, and that is, you talked about the great guest lineup you have. There's one in particular that everybody wants to hear from. The minutes of the last meeting said no decisions were made. So I'm wondering what we should expect from the chairman. Is he going to be giving us guidance or opinion?
Well, the chairman has not shared his remarks with me, so I could not honestly tell you what he'll be offering, but I'm sure it will be worth listening to.
From the Midwest, Esther George in the Kansas City Fed, and a decidedly different president of the Fed. She does not have a PhD in economics, think James Bullard and many others who do, but just a simply different path replacing Thomas Honig at the Kansas City Fed. Our Michael McKee joins us now as he launches his really intense coverage of this event. I got like 8 questions and no time for them. I got to get breakfast at the Pioneer Grill virtually. But Michael McKee, I really want to go to the voice and place of Esther George in a Washington fixated by Powell, Brainerd, Clarida, and DSGE theory. It's different out in Kansas City, isn't it?
This is one of those times when the Fed Bank presidents add a lot because they are on the ground. They can see what's happening, particularly with COVID in their districts, and they talk to CEOs and companies all the time and find out what they think is going to be the course of the economy through the disease, and also whether or not inflation is going to be a major issue. And if Esther George, who has always been an inflation hawk, isn't particularly concerned, then there's probably not a lot of concern out in the Kansas City district.
The inflationistas are in retreat. She was never an inflationista, to be clear on that. But define a hawk right now. I don't think we know, do we?
It is angels dancing on the head of a pin. The hawk.
That was almost the name of the show. Be careful.
A hawk is somebody who maybe wants to taper sooner. And right now, we're talking December, November. So if you're talking about September announcement, it really doesn't make that much difference. They're all kind of in the same boat at this point. There's less disagreement, and you heard her answer my question on that, than Wall Street would think.
Although I will say her answer to your question about making the conference virtual also interesting, basically dismissing longer-term implications about how this may affect their policy decision-making. Do you hear that consistently from others on the Fed, that basically this is just a circumstantial issue having to do with an idiosyncratic patch of virus cases in the region where the conference was going to be held?
Yeah, that's what you hear from Fed officials, although they caveat that with we have to see, because nobody quite knows where this virus will take us next. We didn't anticipate this Kansas City Fed symposium being canceled. So there is a general feeling that we're going through another wave. But the country has changed. We're not going to lock down as much, so maybe the economic impact isn't going to be as great.
Michael, in your great conversation with the Fed president there, how much did you feel she was weighed down by the worry of doing a misstep at this point in time because of where markets are?
I don't think she's particularly worried about that. I think the focus is going to be on Jay Powell and what he says. So the Fed Bank presidents, Wall Street understands they all have their own opinions, and they've expressed them at great length for many weeks now. So the idea is leave it to the chairman, and we'll get whatever takeaways from his views. The rest of them are just kind of reflecting what they have learned in their own district.
Michael McKee, thank you so much. Greatly appreciated this morning. And again, McKee will be here in 44 minutes, 7 seconds to give his jobless claims as well. Looking forward to John writing afterwards. Lisa, I find fascinating here at Jackson Hole, and I've always complained about this. Tom Honig once punched me, hit me right here.
Yeah, with the bear.
They don't release the papers until they come out.
Yeah, I agree
Which
with you.
I just can't stand. I want to read the papers. McKee, let me rephrase this, folks. There's like 8 papers, Lisa.
I know exactly what you're going to say.
And I go to McKee and I go, which one should I read? And
then
McKee tells me which one to read, and I read it.
Hold on a second. Do you read it front to back, or do you read it the first
It depends
few
if
pages?
I read it at the Pioneer Grill, printed out over, the Pioneer Grill breakfast, if I'm not having the Lager Swiss breakfast.
Yeah.
And other than that, I read it on a couch next to tourists.
So I got to say, I actually was very interested by certain aspects of that interview. In particular, how Esther George dodged certain questions, such as the fiscal stimulus question, the idea of, well, that's not our job. We look at everything that could potentially come up that has any ramifications. We take everything into account. How much can we absolutely learn as the Fed looks at a scenario where they're still weighing all risks, Tom?
It's very,
with that.
And Francine, the process here is so different from the Bank of England. I mean, it's to me almost, over here at least, the Bank of England has almost been removed from the debate, and I know that's unfair.
Well, no, I don't think it is unfair, actually, Tom. When you look at, the differences between the Bank of England and the Fed, look, you have a lot more to contend with. One of the things that we keep on hearing from the ECB, which we also heard from Philip Lane yesterday, is that they worry about when the Fed starts. And there was a great piece by Liz McCormack saying, actually, we focus so much on when tapering starts, we forget on when it ends, and that will be crunch time for the markets. But the ECB is looking at some of the spillover effects of when that starts in the U.S., and so Europe is kind of following at this point.
Red and green on the screen right now, the VIX 17.31. On radio, on television, stay with us. Claims in less than 45 minutes. This is Bloomberg. Good morning.
With the first 5 news, I'm Rishka Gupta. Rising coronavirus cases are limiting what Fed Chair Jerome Powell can say about what's next for U.S. monetary policy. Powell speaks tomorrow at the annual Jackson Hole Central Bank Symposium. The conference has been turned into a virtual one this year. Powell's expected to reinforce the message that it will probably be appropriate to begin scaling back the Fed's bond buying program by the end of the year. The US and the UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. British Prime Minister Boris Johnson discussed the evacuation today.
I think we have to be transparent about the risks, and we have to be realistic about what's going on. And you'll appreciate that there are Islamic State Khorasan province terrorists out there.
The US says there are still about 1,500 Americans in Afghanistan, but many apparently don't wish to leave. Bosses in Manhattan have lowered their expectations for a return to office next month. Cases of the Delta variant are on the rise in New York, and a survey by Partnership for New York City says employers now see 41% of office workers returning by September the 30th. That's down from an estimate of 62% in May. And Japan has halted the use of 1.6 million doses of Moderna's coronavirus vaccine. Several vaccination sites reported foreign particles were found in the vials of the vaccine. There have been no safety concerns tied to the vials so far. Moderna says the manufacturing issues arose at a contract site in Spain. The speculation that Bitcoin's 60% rally since last month's lows is running out of steam. The cryptocurrency's burst above $50,000 didn't last long. Bitcoin and other tokens are lower today. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
The reality is, most of our critical infrastructure is owned and operated by the private sector, and the federal government can't meet this challenge alone.
Good morning, everyone. We greatly appreciate your attendance. The President of the United States speaking, advancing the story forward as they see it, as we've heard from Ritika Gupta, Anne-Marie Horton, and Emily Wilkins. It is a really, really dicey time in Afghanistan. We'll be following that through the entire morning as well. What you need to know, and you take the subway. You don't take the NRBQ, you take the NQRW. And if you're up by Central Park, you're at Nordstrom's in their swanky new store, which I think pretty much everybody said has been a colossal failure, and you wander down on the NRBQ. No, that's a music joke, folks, it's before Lisa's time. You wander down on the NRBQ with David Wilson to Macy's at Herald Square. In the distance, 12 minutes on a bus has never been greater. I mean, it's stunning.
Yeah, not in the stock market anyway. I was just struck by the reaction among investors to those two companies' results. And I actually threw Kohl's into the mix just so you could have something to compare against historically, because those are the only three department stores in S&P's benchmark U.S. indexes. You got Kohl's and Nordstrom in the mid-cap 400 and Macy's in the small-cap 600. But I got to tell you, 37 percentage points difference, because you saw Nordstrom's go way down yesterday after its numbers. After last week, Macy's went way up.
You look like Dana Telsey. Give us a securities analysis on this. Why?
Well, it seems to me, they're much smaller companies now than they used to be. If only because
David, you just throw out a shoe. All you do is mention a brand, and that gets the difference. What's the brand difference between Macy's and Nordstrom? Valentino?
I don't know. I don't shop in those stores all that much to know the brands. It really more comes down to the fact that these are smaller companies now, because the industry has really been hit by the rise of Amazon as much as anything. And as a result, you have stocks that have become more volatile along the way. You go back 7 quarters, the gap was 30 points top to bottom in terms of stock market reaction. They're just more volatile companies now, given what's happened to retailing. And of course, you throw the pandemic in, and you can argue that's really heightened.
Yeah, well, I will say, Tom, by the way, Dave Wilson's not a Nordstrom or a Macy's guy. He is a Louis Vuitton kind of guy, I think.
He's very Louis Vuitton, absolutely.
Louis Vuitton. There is a question, though, of how much there has been a shift away from brick and mortar and now kind of back to brick and mortar, with even Amazon opening some stores, distribution stores, but also just, this emphasis on a multifaceted storefront that can also do everything in terms of deliveries and pickups. How much have these stores adapted to that, and what kind of traction are they getting?
Well, I believe the word you're looking for, Lisa, is omni-channel. That's sort of the jargon of the industry, the idea of being able to buy online and pick up in the store, or whatever you choose. You do it all online, do it all in the store, doesn't make any difference. And, to some extent, these companies have adapted to that, made the convenience more of an issue for themselves, and therefore, making shoppers happier. So, they have adapted to some extent, but the idea of Amazon sort of going in the other direction, tells you that there's value in actually being in a lot of places, so people can pick up stuff, even if they order it online.
I don't care. Did you ever see NRBQ, the New Rhythm and Blues Quartet?
I can't say that
They
I
were
did.
phenomenal. I saw them at the Dockside Inn in Newport, Rhode Island. It was a small gig for them. These guys were from Kentucky, and they ended up at the Record Plant in New York. Really, it was like an original blues thing. NRBQ.
Yeah, I'm sort of familiar with the music. Not enough that I could shout you
old.
titles off the top of my head, but
okay.
I have heard
Do you
of
like
them.
I did the bus there from Nordstrom down to Macy's?
Yeah, I like that.
He needs an ego boost. Come on.
Now you have to figure out how to make that bus stop at Kohl's.
Lisa, have you been in the new Nordstrom at Central Park? I haven't.
No, I haven't. I have to be honest.
I think, like someone like Vanessa Friedman at the Times or others would say, it's not working.
Yeah.
Francine,
Tom,
help
if you
us
believe,
here.
Tom, if anybody believes that you take the bus anywhere, then they'll believe anything. Treasury's at 5%.
Well, I will say, maybe you're talking about the band. Can we talk about ever have a drink of ouzo?
Ouzo?
And then go out and play?
Ouzo and luxury shopping.
I wouldn't know anything about
Probably don't go ahead.
having ouzo and playing really not very well.
Anyway, I will say, it is interesting to see all of these transformations and how quickly they've been moving. And interesting that Dave also pointed to retail sales coming down. We're going to be getting some spending data tomorrow, in addition, just ahead of the Powell speech. So interesting to see if we continue to see momentum there, Tom.
Yeah, we will. In the next hour, Sam Stovall with this is important. We've done a lot on equities recently. We're going to get a reaffirmation, and Sam Stovall's never a super bull, super bear. He's going to look at the underpinnings of the market. That will be must listen, must watch. Claims in half an hour. Stay with us. This is Bloomberg. Good morning.
look at everything we've been through, it's not clear we went through a recession, so therefore it's not really clear we're going into a recovery.
There's endless reasons for optimism if, in fact, productivity growth is accelerated.
Monetary policy is getting a bit more rational, and the economy is solid, and earnings growth is likely to remain strong.
The big problem, if we don't start tapering, is the pressure of inflation.
I would watch the debt ceiling. I think you got to fear the debt ceiling. September is going to be a white knuckle event.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Countdown to jobless claims, countdown to personal spending. Good morning. This is Bloomberg Surveillance on Bloomberg Radio, Bloomberg Television. Tom Keene, John Ferro, Lisa Abramowicz. John Ferro off, Francine Lacqua very much in. Tom, we are about 30 minutes away from these initial jobless claims. Does any data at this point matter?
Yeah, I think the data matters, frankly, and what it's going to be is an outlier. You've got a disparity between the so-called hard data and the soft data, the emotional data, confidence and all that, which shows a lot grimmer picture. But the fact is the trend of the weekly claims data, which is its own beast, I would fold it in with JOLTS data to get a better picture, but it's very constructive, and we hear that from the equity bulls.
Well, we're all watching the data, and the Fed is watching the data, and Francine, I've got to say, I'm looking at some of these speeches, and I heard what Esther George just said, and there's we're doing a lot of watching. It's not clear what we're doing in terms of learning or what they're going to do in terms of doing.
No, but it was a fantastic interview, actually, that our Michael McKee had with Esther George, because it's very, very clear that she was revving to go. Now, I know this is partly because she's president of the Federal Reserve Bank of Kansas City, but in general, she just says, look, policymakers at this point need to get started, and I do feel, Lisa, that maybe in the last 2 to 3 weeks, there's been more of a tilt from policymakers, that the bigger worry is actually a policy mistake because you don't act quickly enough rather than leave accommodation too late.
This idea here of the balance of risks and where it lies, right? Is the balance of risks moving more towards overshooting with inflation, or is it more towards perhaps not being easy for long enough? And this all comes at a time when the stock market cannot go high enough for anybody, Tom. I mean, this to me, I think, is actually one of the key aspects. How does the Fed respond to a buoyant and ever more buoyant stock market?
I'm going to stop the show and say it's real simple. They're slaves to the data. They're as ex post as I've ever seen in my life. They've got some newfangled theories, which are going to be in those papers at the Fed. And again, Lisa, you've trumpeted the inequality debate. That's a new mission for the Fed. Great. But the answer is they're going to do one and only one thing. Wait for the data.
But honestly, to Francine's point here, the data is bifurcated. You are seeing inflationary pressures in places. You are seeing data that might support their going. And the idea is, if they wait too long, do they have the tools to counter inflation? Do they have the tools to potentially tamp down on trends that are independent, frankly, of their purview?
Seriously, it'll be interesting to see tomorrow if Chairman Powell brings in one of the inflation summaries here, like the Dallas trimmed or the Atlanta inflation data, and particularly my favorite of the Cleveland Fed as well. Speaking of data, let's do data. Futures red and green on the screen. The VIX, again, giving me much. It's boring, 17.31. Yield, and we round up to a 1.36% on the 10-year yield. I'm sorry, I think this is a trend that bears looking at into Thursday, into Friday, indeed into next week as well, as we've seen yields come back very nicely. I'm going to leave it there right now, because what you want to hear about is the equity market. This at Dow, 35,405. Sam Stovall, a few years ago, was sitting on an acclaimed father's lap, considering the Dow at 350 or whatever it was back then, with CFRA and their chief investment strategist. Sam, we get heated mail when we talk to bulls. What's the level of your bullish belief right now?
Well, good morning, Tom, and thank you for that intro. Yeah, I never crushed my father's lap, but good thing I haven't sat on it in a while. Anyway, the feeling is that the path of least resistance continues to be higher. Even though we have seen a creeping up of the 10-year yield, we're still seeing investors gravitating toward the growth side of the equation, also looking toward real estate, et cetera. So 4620 is our target.
You have, Lisa, please go ahead. I'm sorry, my fault.
No. I mean, Sam, no worries. It's just, I got to jump in because you talk about 4,600. You sound like a bear. I mean, honestly, this is a market where people can't get bullish enough. And are you also thinking 5,000, 6,000, 7,000 and projecting out incredible earnings and returns for the foreseeable future?
Well, what's the old saying? You target a price but not a date, or you forecast a date but not a price. So yes, those numbers that you mentioned will be attained at some time down the road. But I think we also have to make sure that we are risk mitigators at the same time. We've gone 3 times as long as we normally have between declines of 5% or more. I think that the market is vulnerable to some sort of an upset, whether it comes from a policy misstep, whether it comes from geopolitical factors, etc. So I think that we really have to just not assume that the sky is the limit.
Sam, how do currencies actually play into some of your equity calls?
Good morning, Francine. Well, currency is an important part. When we look at the technicals of the euro versus the U.S. dollar, the weakening that has been experienced over the intermediate term implies that investors do expect interest rates here in the U.S. to be picking up, possibly because of the Fed initiating their tapering in the fourth quarter of this year, possibly because of the continued improvement in economic activity and maybe even the peaking of the Delta variant.
Sam Stovall, you are acclaimed for understanding the vogue of the moment, the fad. Remember tick. Everybody, the world stopped like 14 times a day to look at the tick data. And there was the put-call ratio and on. What's the fad right now where you say, get your radar up and be cautious?
Wow, no pressure there, huh, Tom?
No, none.
Well, I think that the fad really is growth versus value. What kind of a rotation are we possibly going to be seeing? Right now, investors are chock full of growth stocks once again, whether it's tech, consumer discretionary, communication services. Yep. And the real question is when or if, and I think it's more a when, not an if, that we see a rotation back into the value side of the equation because the economy is expected to be improving. We are likely to be seeing passage of one or both infrastructure packages, and we will start to see the 10-year yield creep up once again.
Meanwhile, Jim Bianco was on Bloomberg Television yesterday, and he was talking about the Fed put that's sort of implied in markets, that there is this belief in stock investments, that if there is a big drawdown, and a big drawdown could be 5 to 10%, the Fed will step in. They will decelerate their tapering. They will become even more accommodative. Do you agree that there is sort of this implicit backstop baked into valuations where they are in equities right now?
I think that could be a mistake to assume that the Fed will be stepping in should we see a 5 or even a 10% decline, because those are fairly natural in the stock market. And I think that if, however, we do start to see the stock market fall into a bear market territory and that there is an actual risk to our financial system, then by all means, the Fed will step in. But I don't really think that the Fed is going to be stepping in, if we trip, fall, and just scrape our knee.
Sam Stovall, we spoke the other day of the 10th anniversary of Steve Jobs resigning from Apple. Everybody, including me, got that wrong. Woe is me. Steve Jobs, he died tragically on October 5th, 10 years ago. And this guy, Tim Cook, he can't do it. And as you have chronicled, Apple to the moon. How do you know when to get off these stocks that just go and go and go and go?
Well, you look at the fundamentals, you look at the technicals, and you listen to your analysts. What's the old saying? The analysts do the work, but the investment strategists take the credit. I love that. I hear what Angelo Zeno says about Apple, and wait for his commentary from a fundamental perspective.
What's he say? What's he say right now?
Right now, still a favorable outlook for Apple. We have it ranked 4 stars, so we like it, but we're not willing to bet our bonus on it.
Folks, so much of this is not making money, it's not losing money. And when I lecture on this, and Stovall doesn't get a royalty, I say nothing helps you not lose money like the star system of CFRA. It is a great and beautiful thing. Mr. Stovall, go away. Thank you. That was a clinic. Thank you so much. Sam Stovall, I can't say enough about his work over the years. Lisa, the star system, everybody's like, it's boring, it's stodgy, it's like watching paint dry. Man, when they fall out of love with something on the star system, get your radar up.
Yeah, this idea that people take notice and that there is this respect for that. I just wonder how the star system accounts for valuation and how the input of the 10-year goes into that. I mean, honestly, I'm going back to Dave Wilson's chart earlier in the week where he was looking at the correlation, the inverse correlation between bond yields and tech stocks. And I wonder how much that can continue. I mean, in other words, if you have these revenues and you have this secular story, how much do these have to be linked, or are they potentially going to try to go their own ways as the world becomes a rosier place, Tom?
Well, it's going to be interesting to see. Right now, red and green on the screen. Francine, quickly here. The equity markets, many people in Europe are saying go long Europe, that Europe's behind. You got to own Europe.
Yeah, a lot of people, and that is also a currency call. So if you were listening to Sam and some of the others, I spoke to Janet Henry earlier this morning, it's also euro-dollar call. Tom, I think what people are maybe underestimating is that when you look at some of the budget for a lot of the countries, it could all be disrupted because of elections. So if you look at the uncertainty of the elections, be it Germany, be it France in 8 months from now, you don't know what comes next. And so that could actually change the trajectory for some of these European equities, unless it's European equities skewed towards the U.S. market.
I do know what comes next for us. Ira Jersey with us. No, not on Premier Football this weekend. Ira Jersey on what we're seeing in liquidity and on the wall of money that's out there, particularly overnight repo. Really looking forward to catching up with Ira Jersey. John Riding, after Michael McKeon claims. Really, really strong 40 minutes to come. Stay with us. This is Bloomberg.
With the first one news, I'm Rishka Gupta. The US and UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. The Biden administration says it knows of about 1,500 Americans who are still in the country. President Biden and Israel's Prime Minister Naftali Bennett plan to discuss strategy on Iran today at the White House. Both countries consider that Iran is speeding up its nuclear program at an alarming rate. The US favors a diplomatic agreement to halt the nuclear activities. Israel has said it may use secret attacks. Vice President Kamala Harris says she raised human rights concerns with Vietnamese officials after being criticized by activist groups in Hanoi. Harris said she brought up the issue of dissidents serving prison terms, but when she was questioned, Harris didn't explain how Vietnam's human rights record is different from that of China, another communist country that doesn't tolerate dissent. In India, regulators have cleared the way for the Boeing 737 MAX to resume flying. The plane was grounded worldwide more than 2 years ago after 2 fatal crashes. 17 regulators have now okayed the 737 MAX, and a Boeing team went to China this month to demonstrate the changes it's made. Bloomberg's learned that Western Digital is in talks to merge with Japan's Kyosha. A deal involving the two chip companies could be worth more than $20 billion. The companies are longtime joint venture partners. The combination would create a bigger competitor for Samsung in the market for memory chips. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
I think it's unlikely. I know there's been a lot of information that has come out to really change the forecasts since they had their last meeting. I don't think Jay Powell wants to upset the apple cart. I really don't think he's going to try to push people in one direction or another. Obviously, there are a lot of different views around that Fed table, and I don't think he's going to try to say, okay, here's my view, and everybody better follow it.
The mathematician from the Booth School, Randall Krosner, first-rate financial economics, if you will, always good with the Booth School in London. We're thrilled to get his comments here on the event forward. We're going to digress right now and talk liquidity. Ira Jersey is definitive on this. He drives forward Bloomberg Intelligence rate strategy, and he's looking at the 30-year bond, the Austrian 90-year bond. Ira, I just want to know about the trust money, the overnight money, and I'm sorry, it's inching up $1 trillion, $1.1 trillion. How and when does the overnight repo market stop its ascent?
Yeah, so I think the Fed's facility, which is what you're talking about here, Tom, is going to continue to grow because the economy doesn't need cash at the moment. And all that the Fed's doing by buying all these assets is creating more cash, which then people say, well, what are we going to do with this? We don't want to make zero because, our alternative in the repo is the repo market, and that's not making any money. So they put the money to the Fed for a whopping 5 basis points, but it's above zero, right? So people are putting their money there. Our estimate is it's going to get somewhere between 1.7, 1.8 trillion before it's all said and done, and that's assuming that the Federal Reserve starts to reduce its asset purchases, so that dreaded taper in November.
Okay, a smart guy like you who says calm down, says 1.7 trillion, others say 2 million, whatever. Do you have any experience at how we come down from 1.7 trillion?
Yeah, well, we do have a little experience because at the end of when we tapered last time, the Federal Reserve had the reverse repo facility, or had something largely similar, and what happens is over time the economy continues to grow, more cash is demanded, and less people use the repo facility, and that is something that I suspect will happen again. Now, of course, now it's significantly larger. The Fed purchases have been significantly larger. The market is just bigger. One of the oddities that's occurred over the last decade and a half or so is, look, when you go back and you look at 2005, 2006, kind of, when I first started in rates and moved from credit, the repo market, the non-Fed repo market, is about the same size now as it was then. Meanwhile, the Treasury market, which the repo market, the repurchase agreement market helps fund, is 5-6 times larger. So so there is a funding kind of gap out there.
Lisa, I just want to admit
that has to come in and help.
Lisa, quickly here, do you understand, Lisa, that in the fixed income racket, to move from rates to credit is like going to the dark side?
Yeah, but to move from credit to rates is traditionally thought of as the downgrade, and yet in this world, rates really determine
Jersey
all
never
of credit.
recovered.
No, I mean, but in all honesty, but it's the opposite at this point. Wither rates is wither credit. It's the same story in many cases.
Well said.
Apart
Totally
from
agree.
some of the security selection. Ira, when you talk about the repo market, though, we're talking about the functioning of the world's biggest and deepest market that is actually starting to function a little less well. And you're starting seeing liquidity dry up in certain corners of the Treasury market at a time when people say there is potential for some sort of disruption. What's your view on the fragilities that we're seeing right now under the surface?
Yeah, the issue with the Treasury market right now is that there's this, what I call an illusion of liquidity. So there's liquidity, and then all of a sudden sometimes there's not. And you saw that last March. That's one of the reasons why the Fed stepped in and did those massive $1 trillion worth of Treasury purchases. And you saw it at other points over the last decade or so too. And a big reason for that is, quite frankly, some of the bank regulations. So the Basel III regulations, some people talk about Dodd-Frank and like the Volcker Rule. It's not as much that as it is the fact that banks cannot, and dealers that are owned by banks in large portion, can't expand their balance sheet and shrink their balance sheet at will. They have to keep within certain lanes. And because of that, when there is a significant amount of selling or a significant amount of buying, you can see these wild swings and liquidity just dries up. And I think that's going to be something that, once or twice a year is going to rear its ugly head, and you'll get outsized moves, and then people will, do studies and everything else. But at the end of the day, it's just that there's no circuit breaker to allow to allow demand to be absorbed when there's a significant amount of selling or a significant amount of buying.
But Ira, why do we not have those, circuit breakers? And is anyone looking at putting them in place?
Well, so the regulators talk about this as saying they want institutions to be safe and sound. And in order to do that, you have to hold a significant amount of capital. Keep in mind, before Basel II was implemented, Basel II and a half actually, the treasuries had zero risk weight by under the Basel regulation. So basically banks and dealers could hold as many of them as they wanted in whatever risk they wanted. So 30 years and everything, and a lot of interest rate exposure could be basically taken on the balance sheet. They can't do that anymore because the Basel regulations say, hey, you have to hold a certain amount of capital even against the safest assets that are out there. So that's one of the reasons why like the repo market hasn't grown, because repo, when you do repo now, you have to hold equity capital against that, even though it's secured, the underlying is secured by a treasury security.
All right, it's August. I mean, I'm worried about, like Ted Lasso having a Christmas show in August. What was that about? Does it matter, Ira, that Ray Knight is coming back to coach Richmond? When you bring an old player like that back to coach, does that really work in soccer?
Player coaches and can work out very well. And in fact, when you look at some of the highest level coaches, some of them were players, and some of them were not even necessarily some of the best players. You look at a guy at Liverpool like Jurgen Klopp, who you could say is one of the best managers in the world, and he never played. He never won a Champions League, right? Now, and then you go across across the other side, and you look at someone like Pep Guardiola at Manchester City. And of course, he won everything that there was. So I think that it's important for someone to know the game and be a student of the game.
Oh, this is
and a lot
great.
of times those are players.
Francine, I miss John so much.
Oh my God! I literally just was writing that. You clearly miss him a lot.
Did you see, Francine, how Ira Jersey totally changed there, talking about Richmond and what Ray Knight's going to be doing and all that?
I still can't believe you know the rules of the. I mean, 18 months ago, Tom, you didn't even know what football was.
Yeah, I don't. I hope I'm spelling that right. Ray Knight of Richmond. I
thought you were saying soccer. SOCCER.
Ira Jersey, thank you so much on explaining 1.1 plus trillion of overnight repos. Lisa, we're 5 minutes away from claims. We're joking around, but this is important.
It is important, and I think it's important for what it tells where the weakness is not. To see progression, to see another post-pandemic low in the number of claims, albeit on an elevated level, highlights that the problem is not with people leaving work or getting fired. It's there aren't enough people to hire. And that, to me, is a question the Fed is trying to get their hands around.
It is a unique character, and we'll have to see how that unfolds. Michael McKee will join us, and then we're thrilled to bring you John Riding of Breen Capital, their chief economic advisor. Red and green on screen, that yield 1.36%. Stay with us. This is Bloomberg. The yield 135 as we launch into important economic data. Francine Lacqua in for John Farrow, Lisa Abramowicz, and myself, and waiting here to get out not only the GDP second look, but also the Thursday claims data as well. We're waiting and waiting and waiting. We're waiting, Michael McKee, we're waiting.
We've got the numbers. We've got the numbers, Tom. We've got the numbers that you want to see. The jobless claims numbers for last week, August 26, 353,000. That is, what are they saying here? An increase of 4,000 from the revised level, because we have to look at the revised level from 348,000 to 349,000. So that's just noise, basically. The movement. I wouldn't read anything into it about difficulties in terms of the labor market on the basis of how many people in total are getting claims. This is interesting. It's 2 weeks delayed, so it's August 7th, but this would incorporate all those states that stopped paying extended unemployment benefits, and it still rises by 182,000.
Is the Delta variant
a little over 12 million. It's almost impossible to say at this point.
You don't know.
I suppose it could be, but at this point, you're probably looking at companies that didn't come back rather than companies that are letting people go because of all the anecdotal stories about how hard it is to find people.
I'm looking at stasis in the bond market at 135, yields in fractionally. I don't want to oversell that. The revisions, Michael McKee, are there. The thing I see on the Bloomberg terminal, Mike McKee, is GDP second look, 6.6%. Are there any papers at Jackson Hole that are actually going to address how America comes out of a boom economy different than the last boom economy of 1947?
It doesn't look like that's specifically a topic, how they come out of it, but there is going to be talk about how monetary policy deals with the new environment that we find ourselves in. First, you have to establish what your new environment is. You do mention 6.6%, which is 0.1% better than the initial report for GDP, 0.1% worse than the forecast. Personal consumption, 0.1 percentage point better, 11.9% compared to 11.8%.
Yeah.
So not a major adjustment here. And I haven't got the details yet, but what I was wondering about, Lisa, was the inventories.
Yeah.
I'll have to look for that in a second here, but that's going to be the swing factor going forward.
Mike, it's interesting to me to see the markets not very much moving at all on this data, even though there is some surprise here, especially to the downside, pretty consistently across the board. And it's not just the wrong kind of upside surprise to jobless claims coming in stronger than higher than expected, which is bad, but it's also personal consumption coming in softer than expected. And I do wonder to what degree markets shrug off any data as simply backward looking at this point.
I think you have to with GDP for the second quarter because that ended in June. And now we went into July with some momentum, and certainly 11.9% is not bad. But now we don't know because of the Delta variant impact on people's spending habits. We saw in the retail sales report for July a surprising drop in the number of people who were buying or the amount they bought online, which is what you would expect them to do if the variant was keeping them home. But we'll have to see when we get the spending numbers tomorrow what services were like for July.
We will see. Michael McKee, thank you so much. And on to Jackson Hole. Those papers released, I believe, tonight, 7 p.m.-ish, is when we'll see the agenda for the virtual Jackson Hole. The yield, 1.3508%, doesn't give me much. Norway with news this morning. This is the Norges Bank, not the Sovereign Wealth Fund, the central bank, Øystein Olsen, to step down February of next year. I'm going to assume as a measured and esteemed economist, that is something along the pace of expectation. Right now, because of time, we got to get to John Riding with us with Green Capital. John Riding, thank you so much for joining us today. John, do we understand or do we have any inkling of how we get from boom economy to 6.6% with a glide path down to whatever potential GDP is? This is original, isn't it?
Well, it's going to be very difficult with monetary policy still in full easing mode, and that's obviously going to be the key thing that people are looking for from this conference is what hints Chairman Powell gives in terms of the timing of a tapering announcement. But I just want to point out one thing that you didn't pick up in your discussion of the GDP report, and that is we get the profit side of the economy for the first time. And corporate profits were up a non-annualized 9.2% in the quarter. And that's very important for driving the economy. You know, economists like to think about looking at the demand side and consumer spending, but we also have to remember there's the incentive to supply, the incentive to invest, the incentive to hire. And those profits data, as we suspected they would be, were very strong in this report.
John, overall, is there, do you believe that actually the Fed wants to move so that they don't miss the boat?
I think the Fed's divided, and I think Chairman Powell has to decide which side of that division he wants to come down on. I think that we have a significant number of presidents and at least one governor who thinks that 2022 is probably the time to lift off on rates. And to lift off on rates, pretty much everyone's in agreement, you have to stop buying treasuries first. Otherwise, it just gets messy because you're easing on the one hand, raising rates on the other. So I think it's divided. But I do think that coming back to Tom's perspective, how do you transition from a boom economy to a more stable economy? You don't do it with monetary policy still in full easing mode.
John, just to bring to you some headlines from one of those Fed officials who do have that view that perhaps 2022 is time for liftoff. The Fed's Jim Bullard, speaking in an interview on the Death Star, as Tom would say, on CNBC, is saying that there's more inflation than expected. He expects at least 2.5% inflation in 2022 and says that the Fed should get on with tapering already. And this sort of echoes some of the comments from Esther George that she doesn't see the Delta variant as potentially delaying anything going forward. Right now, based on what we're seeing, do you agree? Do you think that there is more of a liability for the economy if they hold out for longer and don't start tapering by September, by October of this year?
I think there is. And for one reason, the Fed will raise rates when it has to raise rates. So the later you wait to start tapering, the faster you have to reduce the pace of your purchases and the more disruptive that might be for markets. So that's the first thing. We're at a very low level of yields. Prepare the markets for the taper. and ask yourself, why are we still easing if we're the Federal Reserve? Especially when inflation, 2.5%, Jim is 2.5% to 3% for next year's inflation rate. We're at 3%, but we all see the risks to the upside. It's a bet that this inflation spike is going to be transitory. A lot of the surveys continue to come out with very, very high price readings of the kind that we haven't seen since the early 1980s. So if you're managing risks, the greater risk to me would appear to be losing the gains that you've made, very hard-won gains against inflation, than the risk that the Delta variant is going to cripple the economy. We have a very effective policy tool to deal with the Delta variant. It's called vaccination. And we're going to get booster shots. And states in which people are not as highly vaccinated have much higher breakout rates. And that's real personal human tragedy, unnecessary deaths. But monetary policy doesn't really speak to that. And the claims data don't suggest that the Delta variant case surge is having a material impact on the economy. Now, the third quarter may well be a much slower quarter than the 6.6% in this number. But I don't think that the consumer with $2.5 trillion of excess savings is going to be a major factor in the recovery in putting the brakes on here.
John Resigning, thank you so much. Greatly appreciate it with Breen Capital. Too short a visit today. Francine, you sit in London, you listen to this talk, and I guess it's got to be foreign discussion, but yesterday we were talking about how Powell is central banker to the world. Is Powell central banker to the United Kingdom? I mean, taper and rates and all these dynamics, the fiscal stimulus in the United States, how does it affect Governor Bailey and the rest of the United Kingdom?
Well, everything's linked, Tom. I would suggest that it probably affects the ECB and therefore the Eurozone, as much, if not more, than the UK, just because the UK is a small, open economy. The other thing is that everything's linked, right? You can see it with what's happening with COVID-19, with the supply chains. So we were also talking about the Bank of Korea, the fact that they hiked today, and the spillover effects it could have. So whatever the Fed does, will translate into possibly higher inflation here, a tightening of the markets. The other thing, Tom, is that in terms of do you stop tapering and then raise rates is very similar to the kind of conversations the ECB or traders in Europe are having about the ECB. Interesting. Lisa, we got to stop here and digress out to a transaction in a moment. Long ago and far away, I went up to New Hampshire to one of the primaries, and I sat there with a guy. He was from New Jersey. His name was Al. And we sat in the little rotunda of primary New Hampshire, I believe in Manchester, the Radisson Hotel, I'll guess. And, CNN was over there, MSNBC over there, Bloomberg was doing its thing, I was doing interviews and all. And everybody was on their cell phones, which was a new thing at the time, and everybody was looking at the same thing. And it was a strange thing called Politico.
Yes.
And I'm like, what's Politico?
Okay, he's talking about the headline that Axel Springer is going to be buying Politico, which just crossed, and there's no price disclosed. Honestly, I'm thinking to myself, where is he going with this? Am I going to be talking about going to New Hampshire? Are we going to be talking about cell phone use?
Edmund Lee has him at a 5-time sales, who knows, but what Politico invented in its linkage into how we all, including all of Bloomberg, look at the cell phone. Well, absolutely stunning.
Yeah, the idea of the media and the role ahead. We're not going to be discussing that as much as markets ahead coming up today on the Open. John Hancock, investment management company, co-chief investment strategist Emily Rowland, joining us to discuss it all. This is Bloomberg.
With the First One News, I'm Rishika Gupta. Rising coronavirus cases are limiting what Fed Chair Jerome Powell can say about what's next for U.S. monetary policy. Powell speaks tomorrow at the annual Jackson Hole Central Bank Symposium. The conference has been turned into a virtual one this year. Powell is expected to reinforce the message that it will probably be appropriate to begin scaling back the Fed's bond buying program by the end of the year. Bosses in Manhattan have lowered their expectations for a return to office next month. Cases of the Delta variant are on the rise in New York, and a survey by Partnership for New York City says employers now see 41% of office workers returning by September the 30th. That's down from an estimate of 62% in May. Australians are eager to travel overseas again after 18 months of being cut off from the rest of the world. Qantas says demand is so great, it's bringing its giant Airbus A380s out of mothballs early to handle the load. Airline's CEO gives the credit to Australia's vaccination program.
What you're seeing happening at the moment in Australia is the biggest uptake of vaccinations, higher than the peaks in the US or in the UK when they were rolling around at the start. There was overwhelming demand for it, and we see that continuing. So we're comfortable that we should be able to get to those 70-80% targets.
Flights from Australia to the US, Singapore, Japan, and UK and Canada will start in December. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Like so many of the passenger airlines, our ridership contracted significantly back in March and April of 2020. Now we're at about 65 to 70% of ridership recovery, with stronger bookings into the fall season and beyond. So good ridership recovery, which I think underscores the essential nature of the services that we provide.
Mr. Flynn, William Flynn of Amtrak, the chief executive officer there on where they stand on infrastructure as well. And what he knows is if he needs people from Tribeca to, well, go on up to Penn Station and climb on board Amtrak, particularly at the new and wonderful Moynihan development, they got to live somewhere. And we saw that yesterday with Steve Ross and Related coming out with a huge announcement of optimism on New York City with Blackstone. It's $250 million to redo, Francine, you're going to love this, Truffles Tribeca. What kind of a name is that for a building? But that's what it's, honest to God, Truffles Tribeca is what they call it. He used to plant truffles in Australia. Scott Crow joins us right now with Center Square Investments, their chief investment strategist here. Scott, come on. Blackstone, $250 million over to Related. That is optimism on New York City real estate.
Well, absolutely. From a living standpoint, New York City is already roaring back. Rents are back at or above pre-COVID levels because people want to live in cities. They like the excitement of the cities. They like the amenities that cities bring. But the bigger question is, will people be working in cities as much as they used to? And that's why the office market continues to be in a little bit of a funk, but the residential side has just come roaring back.
You have been, from your days at Cohen Steers years ago and the rest, you have been research-based. What is your research on if, how, and in what way we will return to our offices?
Okay, so office is the new retail. And that doesn't mean that office is the new mall. It just means that office is the next major sector that's going to be disrupted by technology. We can shop from anywhere, and now a little bit we can work from anywhere because we're letting technology help drive how we work and drive that bus. So what it means in a nutshell is that we are going to go back to the office, but in a different way, and we're going to use office less than we did before, but in a very different way. A lot more about collaboration when you're there. It's going to become almost more of a hospitality-based model with a lot more flexibility built in. Employers are going to have office space that is very attractive to employees from a aesthetics, from an amenity standpoint. So the whole game's going to change. Just think of an Apple store, right? It's beautiful real estate.
Right.
Apple just only is in 200 locations, not in 1,000 malls across the United States.
Okay, Scott, I'm looking at prices in Manhattan, right? In Soho, it's $1,843 per square foot. I don't know if that rises or not, but why would I live actually in the city center and not live outside and then rent somewhere a couple of days a week because I'm working there?
It's a great question. People like being around people. People like being in Soho. People like being in Manhattan. There are more people that want to be in Manhattan than there are condominiums, right? There are probably not more companies that want to be in Manhattan than there are office buildings. And that's the big difference. And that's why if you look at dollar per square foot pricing, it's $1,800 for apartments and it's $800 for office. And that's the reason for that.
Right. All right. Are people, changing what kind of real estate they want because of the hybrid working from home model?
There's been a value transfer away from commercial real estate to residential real estate because we're doing more of our activities, quote unquote, at home in our residences. So yeah, absolutely. The kinds of real estate that people are investing more in their residential real estate. They want that extra bedroom, that extra half bedroom, because that is going to be where they're spending a lot of time doing their work.
Scott, tell me about the malls in the suburbs. I mean, everybody's focused on cities and it makes for great financial media press and there's this, that, and the other thing. But you have so much experience of not so much strip malls and not the mega malls, but the in-betweeny malls. They got a Starbucks on one corner. They got a Chipotle on another corner. How are they going to do in the next 10 years?
Yeah, so I think, look, the mall industry is going through a huge consolidation. In fact, one of the things that's been helpful for companies like Simon Property Group is that COVID really accelerated a rationalization of the supply. In other words, lots of malls closed, all right? So we're getting closer and closer to equilibrium as it relates to the number of malls we have in this country versus how we want to shop in the future. But there's a big, exciting part of retail that's doing very well right now that we're a big investor in at Center Square called service properties. And that's because services are taking up a larger and larger share of everyone's wallet. Goods are all going online, but services, so your Starbucks, your Chipotle, your hair salon, your dentist, your doctor, your massage parlor, etc., we're spending more money on these things.
Right.
And that's actually a very bright spot within retail that not many people are seeing right now because everyone's concentrated on the headline, which is, the local mall closing.
Scott Crow, not enough time. Thank you so much. Greatly appreciate with Center Bridge there. It's something we don't, Center Square, I should say, with Center Square. And I must say, we don't spend enough time on this, on commercial real estate and those dynamics. Francine, what is fascinating about the Fed speak is we have Esther George talking to our Michael McKee. Yeah. Time to get taper started is the headline. Bullard's over on the Death Star saying, time to get taper started. I wonder where, up to Powell and after, where are the people out there that are going to say, wait on taper?
Right. And I don't know whether that will have that much of an impact. If you look at the timeline, Tom, and we've been talking a little bit about this over the last couple of days, interesting that Jim Bullard, actually talks about getting taper done early so that it gives a little bit more flexibility to the Fed and gives it a little bit more options on raising rates. Now, there was a beautiful piece by Liz McCormack on our Bloomberg terminal. You can also find it on our website that basically argues we're so focused on tapering. What the market is really worried about is when you start rising rates. And
Agreed.
So that's the lens through which you should be watching it. And it's interesting that actually, Jim Bullard just brought that up, minutes ago.
Right, and we saw that from Ira Jersey as well, this partition that's out there. What I would also suggest, folks, is we've got loads and loads of data to come out as well. As we move on through the morning, there's going to be a lot to talk about, including in Washington, which has been fairly August silent this morning. Really distressing news out of Afghanistan. We'll continue to watch that story, and particularly around the beleaguered airport in Kabul. In economics, well, it's a 6.6 American GDP. That's a second look for the second quarter. The market's taking it in stride, but critically looking at the tea leaves here, 1.3661 on the 10-year yield. I'm sorry, that's a higher yield and really bears scrutiny as well. The VIX 17.48, red and green on the screen. David Weston with Ms. Barr of General Motors. Look for that at 12 noon today. We continue on Bloomberg Radio and on Bloomberg Television. Good morning.